Hi everyone, let's cover my Elliott Wave analysis on Bitcoin on the daily time frame and the 1 hour time frame. And as you can see on the daily time frame, I like to start by talking about this diagonal, which I also covered 10 days ago in this video here. But then price was still hanging around these lows here and we were looking for price to move up, take out the previous all-time high at least once more to theoretically finish a potential diagonal. Now, what I can see online is many people talking about a leading diagonal. So they count this as a 5-wave move up. They label it a wave 1. They're going to look for a 3-wave corrective structure in 2 and continuation to the upside. And in theory, there's nothing wrong with that. It is a scenario as long as you don't take out the low at 74.4K. However, please let me remind you of what is written in the book Elliott Wave Principle and the probabilities. First of all, ending diagonals are more common than leading diagonals. Second, multi-1-2s are more common than leading diagonals. And this is a quote that I quickly picked from the book here. Analysts must be aware of this pattern to avoid mistaking it for a far more common development, a series of first and second waves, which basically refers to what I wrote over here, the second point, multi-1-2 more common than a leading diagonal. So if one looks for a leading diagonal here, you're basically looking at the lowest probability Elliott Wave scenario. The probabilities at this moment in time are higher that either you have an ending diagonal here, which basically means the minimum target is taking out the low at 74.4K, or a multi-1-2, where you're going to be looking for extreme upside. And in that case, you don't want this low to be taken at 98.2K. So let's now run through these scenarios in a bit more detail after covering these probabilities, right? So for a leading diagonal, right, lower probabilities does not mean it's not possible, but it's all probability. So for a leading diagonal, what we want to see is a significant move to the downside, a 3-wave corrective structure to finish after the 2nd of October 2025. That is your most common time target. Finish somewhere after this vertical line on the chart. From a price retracement perspective, we like to see a retracement between the 382 and the 0.786 Fibonacci taken from the start to the end of the diagonal, giving you an area between 105.4 and 85.1K. Now, preferably after a leading diagonal, you get a deep zigzag family retracement. That is most common. So it's simple zigzag in an ABC or a W, X, and then a wave Y, and you continue towards the upside. Basically, what I write here is what you want to see. The move to the downside has to be a 3-wave corrective structure, right? Which then eventually should be confirmed, no? And then the move up should be a motive wave structure. So either an impulse, 1, 2, 3, 4, 5, correction, and you look for price to take out this high again and then continue to all-time highs later, or a diagonal, 1, 2, 3, 4, 5, correction, and you look for continuation as well. Now, when covering an ending diagonal, I mentioned, well, the minimum target is the low at 74.4K, which is true, right? But what you're basically looking for is the move to the downside. It's the complete opposite. So the move to the downside has to be motive. So either an impulse or a diagonal down, right? 1, 2, 3, 4, 5. You want a 3-wave corrective structure, right? Messy stuff to the upside. And then another leg to the downside. And just keep doing this till eventually you take out the low at 74.420, right? Now then we get to the second scenario here, which is an unfinished diagonal, lower probabilities, but I like to cover this because I also saw this somewhere. Here we then have 1, 2, 3. So this recent all-time high is 3. You look for 4 and 5. But mind you that in a diagonal, you really like to see overlap between the price action of 1 and the price action of wave 4. Which is also by far most common. So preferably, price actually moves to the downside here into that high at 111.8K. But you can also see the 2 red lines here. Those are your invalidations for this scenario. And you can see that I have an invalidation here at 110.7K, which is very close to the overlap line, right? So basically, the only area you really have for price to retrace to here for this diagonal is this little bit. Because if you go too deep, invalidate it. you do want overlap. So you do want to get down here. You just don't want to get down too much to 110.7, right? So this diagonal is currently not a preferred scenario as long as price is not at least overlapping with one. Low probabilities, you're looking at a diagonal as it's by far most common to see that overlap. It's not a rule, right? It used to be. It's not a rule, but it's a very strong guideline. And then you get to the bullish scenario, right? Where's my, there you go. There's the moon, right? So the bullish scenario, the multi 1-2 still has higher probabilities than a leading diagonal, right? Where you basically look at a 1-2, 1-2 and price just moves towards the upside, right? So here your invalidation is 98.2K because in this scenario, you would count this as a 1-2, 1-2 continue towards the upside, right? And then eventually you're going to be looking for wave 3, price moves up. You want to see volume increase as price is moving towards the upside. Now we cannot count this as a single wave 1 here and a single 2, at least according to impulsive rules. Of course, the diagonal would be your like 1-2 also, but 1, 2, 3, 4, 5 doesn't work because there's overlap between the 1 and the 4. So that is why over here you need to look for a double 1-2. And of course, if you count this as another 1-2, it's a triple 1-2, but you get the idea. You just look for continuation to the upside, which should be a very big move. And in case you didn't notice, this text box has been on my chart for every scenario because I really, really want you to remember the text inside this box, which has to do with the probabilities. Then we get to the 1 hour time frame. And the bulls by now, because price took out the low here, I woke up and price here took out this low again. So now we have to look for a WXY basically. So you have a WX and an ABC down in your wave Y. This is your bullish scenario, where if we count the most recent move towards the upside, this one over here, as either a wave 1 or a wave A, and this retracement as 2 or B, then this is your invalidation, right? And that is in case you like to count a triple 1-2, yes, even more bullish basically. So then this becomes your second 1, second 2, and this is another 1 and another 2, and you just keep stacking 1-2s, 1-2s. But I don't like to be that like bullish and it's almost out of proportion. So instead I just keep 1-1 and 1-2 on my chart. But locally here, right, a WXY is bullish because after a WXY you expect the all-time high to be taken, right? So that is basically your bullish scenario, basically unrelated to how we count the move up and down, but it's just about the move down here, right? Doesn't matter if it's a 2 or B, or if it's a wave A of a flat and then an ABC, you basically expect the all-time high to be taken as your higher probability scenario. Now, what's very important here is price moves above this green line. I mentioned it yesterday in the update as well, 118.6K. That remains an absolute key area, right? So any longs below the green line is quite simply higher risk. Of course, might be better reward with the invalidation being closer, right? You are entering areas of support. So we are here at a bit of support. As you can see, the range point of controls, these are some of the levels that I have around where price is at the moment. But from a more, I suppose, safe trading mindset, right? If price takes out this high, generally it doesn't just shoot up in one straight line. You wait for a retracement into areas of support, and those are your opportunities to then look for price to eventually take out the high. Now, I can already see it. If price would take out that high, then your bearish scenario is probably once again going to be some sort of a diagonal, which has to be a leading diagonal. But leading diagonals are less common than corrective structures or a multi 1-2. So therefore, your bearish scenario is a multi 1-2 at the moment. So you have your 1-2, 1-2, and you look for a sharp 3 to the downside. Invalidation is the high at 118.6K, which is the reason why it's so important for the bulls to take out that high as well. Now, something else that is important is CVD. I always love using CVD. So here we have my AGGR template, which you can download in Discord. And you can see the green and the red lines. Now, at the moment, right, every bounce that price had so far has been countered by bearish CVD. So price created the all-time high here, and bearish CVD started appearing heavily as well. You can see price moving down and CVD moved up. So people were buying, but they got absorbed by very big limit short positions, dragging price to the downside, right? And every bounce that price had, right, was supported eventually by continuation down, of course, or eventually price continued down, showing bearish CVDs. And it was no different with the recent move that we had over here, where again, bearish CVDs as price is moving to the downside, taking out the low. And currently we have a mix here. You can see a bullish CVD, but once again, a bit of bearish CVD at the top, bit of bearish CVD here. We'll see if that gets invalidated or not. But what you want to see with regards to CVD is you want a market structure change. So you want to see continuous like higher highs, higher lows, higher highs, higher lows, supported by bullish CVDs all the time, right? Not just a single bullish CVD just to be like, oh, look, there's a bullish CVD. That's good. Yeah, I mean, there's also some bearish CVDs. What I would like to see is up, higher, low. Higher high, higher low, higher high, higher low, continuously supported by bullish CVDs, which will give more trust to be part of the move. Like, for example, here we had this structure to the upside. We had bullish CVDs here. That's good. And then price here locally, right, started moving to the upside once again. And we made another high, higher low, more bullish CVD here on yellow. So this is an area, right, where you're looking for price to take out this next high as a minimum target. Price moves up, takes out that next high. Very, very nice, right? Doesn't mean your low is in and you look for strong continuation, but this is how CVDs, at least on the 3-minute, 50-minute, are great to read. And I get a lot of questions about CVD actually and more advanced techniques. But this is one of the things you want to look for. And that's, of course, on a 5-minute time frame. You're looking at a scalp, but you create another higher high, higher low, continuous bullish CVDs. You look for continuation to the upside, right? And of course, if you're good with your TPs and management, obviously it's a winning trade before price then moves down and stops the rest out in break even. And at the moment from the low here, there is no structure yet, right? There's nothing going on just yet. And from an Elliott Wave point of view, right, mixing it with Elliott Waves, we like to see that high taken. So yeah, patience will be rewarded. And then we get to the levels just to show you a bit more, right? So this is currently what I have going on, right? Oh, makes me think in the bearish scenario, I didn't actually show the full bearish scenario. So on the 4-hour time frame, bearish scenario would be an impulse to the downside here, right? A 5-wave structure. If I combine it with some of my levels, you can see how I draw the line around some of the horizontal support and resistance levels that I have on my chart, right? So this will still be a great opportunity, right? It requires a bit of patience to see what price does here, but if it falls, no problem, right? We just wait for an impulse to end. If it becomes an impulse, you look for your 4 5s, eventually great opportunity, look for price to move up, which basically then means you have a bit of a messy beginning here. You get a quick move down. You look to end in an overlapping messy structure again. Those are your 4 5s. The moment that happens, after a couple of new lows into support, you look for a long opportunity for at least a bounce to the upside, which means this can be the low, or you take out the all-time high, or you're going to correct in a 3-wave structure and you go down later. But the short-term direction is going to be similar if you get an impulse to the downside. Now, I promised the levels. I got distracted there. So I just want to make sure I share everything. So here you go. This is what I have going on my chart at the moment. Right, feel free to copy this stuff if you want to. And then we have news this week, also today, right? Trade safe, Wednesday, Thursday, Friday, times Central European time zone. So trade safe can increase the volatility on the chart. And then there we go, the probabilities. So on a daily time frame, quite simply, an ending diagonal or a multi-1-2 has higher probabilities than counting a leading diagonal, right? 1, 2, 3, 4, 5 as a wave 1. Look for a preferably deep wave 2, where this is then a leading diagonal. Lower probabilities, right? As per the theory, it's literally just, it's written in the book as well, right? It's pure theory. An ending diagonal, target 74K, or a multi-1-2 has higher probabilities than a leading diagonal. I'll leave it there. Locally, the move to the downside, bulls need to take out the 118.6K high, which would support the narrative to taking the all-time high again. Only then do probabilities really increase for the bulls, right? Which gives you a more safer setup, right? A safer trading environment, at least to look for longs. Now, bears enjoy losing support, of course, and look for larger moves to the downside into support areas we have lower. If it's an impulse, waiting for the 4-5s can give you a great opportunity. As explained just now at the end, you wait for that grind into support, great opportunity for a position to the upside to either look for a corrective structure and then a move down later, or potentially a continuation if that move down is a wave C of some sort. Now, this is one of those moments maybe where you see a lot of stuff online and you try to find clarity, right? You look at like 10 videos in a couple of hours and everyone says X, Y, Z and etc., etc. And in the end, of course, you need to have your own plan, your own analysis. But this might be one of those moments where it's better if you don't have clarity and you get confused to just wait and do nothing, right? Patience is such an important skill as a trader. You don't need to be in a position every time, right? You don't need to be involved with the charts every time. You want to pick your battles. You want to pick the high probability setups, right? You don't just want to trade because of boredom, or if price moves up here, oh shit, I didn't catch the low, I FOMO, you know, that sort of psychology stuff, right? Trading psychology, very important. I recommend the book, The Mental Game of Trading, or Trading in the Zone, right? But sometimes it's better to just wait for a bigger move to happen, which will then provide clarity, avoids the confusion, and new setups will come, right? New setups will come. There's always, like, your best trade is still in front of you, is still ahead of you, right? It's not behind you. Your best setup is yet to come, right? But you need sometimes a bit of patience if you don't have 100% clarity. That is why in this video as well, I hammer on the 118.6K high, which is very important, right? Which requires patience, because at the moment we're in between the low as well as the 118.6K high. And yeah, I mean, I covered the daily time frame and the 1 hour stuff in the video, right? So no need to repeat it after 70 minutes of video. So hey, thanks for watching this video. Hopefully you found it helpful and valuable. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.